Hello traders, welcome to the LFB and our global video charting review for the oil, gold and silver commodity markets for the 24th of May 2011. My name's Marco Haig from the LFB Trade Desk. We do ask that you read the disclaimer posted here before proceeding with the video. Newswires are very quiet in regard to bullion and oil headlines at this point in time, and therefore we're going to be looking for technical setups rather than fundamental setups in the near term. The technical charts that we'll be looking at on gold, silver, oil and their relevant exchange traded funds are going to be near term. The long term views in the markets at this point in time really are a little irrelevant in regard to the fact that momentum, sentiment, trend, volume are all very mixed, and therefore we're just looking for near-term breakout points. Starting off with the review of gold, gold does look bullish. We've got a move in gold that replicates the inverse equity moves at the moment, not as strong on the upside as equities have been to the downside, but you can definitely see the correlation that global equity trade going down has seen movement into the gold bullion market. So we've seen equities lower, the selling of risk. We've seen the US dollar getting bought, which is the buying of bonds out of equities into bonds and vice versa. But we've also seen the buying of gold after a recent dip down to support. We are favouring the long side of the bullion and oil markets, and we are favouring buying the next dip to support rather than trying to buy this breakout. So we're looking for a pullback towards the 1500 area. That's where you're going to get signals. We did highlight in the client notes last week, at the end of last week, that come out to you on a daily basis. We did highlight the fact that 1502 and 1506 were breakout points that we're going to be looking long on the gold bullion market for. The exchange traded fund doesn't look as bullish, very choppy, very overlapping, and the reason is only trades your 8 hours a day. You can access it ahead of the market, you can access it after the market, but the pricing and the spread in the pre and after market become a little bit volatile. But this has got a little bit of catching up to do. GLD, the exchange traded fund for the gold bullion markets, which are US based funds, probably will gap higher here up towards the 140, 850 area. At this point in time, the thing that you have got to understand on exchange traded funds when gold bullion goes through this consolidation phase, and it's not in one of those very strong near-term bull runs, is that GLD will lag the movement, and you can get appreciation in the gold bullion market that doesn't ever transpose itself into appreciation in GLD. So at this point in time, same as on the bullion, we're looking for a pullback to buy support, not necessarily to buy GLD at these levels. We will send signals out as this move sets up for you. Looking at the silver market, this is XAG on the silver bullion market. Same as gold, a little bit bullish in the near term, but we have gone through a 4-session sideways chop, which is some of the ugliest charts that you'll see in the near term on the silver markets. We haven't had that amount of sideways chop for quite a while, but as you can see, we generated 4 signals that never got a final confirmation. We are using the 100-day that was correct. We are using the 100-day simple moving average as support, which is the orange line sitting here at the 35 area. That's where we'll be buying silver again from. Same as gold, looking not necessarily to buy this breakout, looking to buy the dip, looking for a move back to support. Signals will come out on XAG when that happens. And talking of choppy and overlapping, there's the West Texas Intermediate chart. And I need to look at silver and West Texas Intermediate, then we'll go to the exchange traded funds for both of those. Because I just want to show when these get choppy and overlapping in the main bullion or the main commodity market, the ETF, the exchange traded fund, really doesn't have a lot of time to play catch up. These are very volatile charts in the near term. If you're trading oil at this point in time, you need to have a very strong exit and entry strategy. We have now got trade around the 100-day simple moving average, but that's not to say this is not easily breakable, because we've seen the volatility over the course of the last 3 days in trading at that 100-day moving average, which is around the 98.50 area. Very mixed warning signals there. You don't want to be part of that market unless you really have to be. Now looking at silver, the exchange traded fund, as much as the silver bullion chart looked bullish in the near term, because of the chop and the overlap and the overnight trading session, we've got silver in a very tight channel. If we look at the pennant formation that we've got here on silver, this builds a lot of cause and effect. You will get a gap today because the breakout on silver bullion from 35 up to 35.80 has happened in the overnight session. So if you're on the short side of SLV, you're going to get a gap higher today that you're going to have to eat. If you're on the long side of SLV, you will get a gap higher at 9:30 that will get you into profit. Understand, the silver bullion market's running into stiff resistance at the 36 area. So if you're a near-term trader, you might want to bank that gap and then look to buy the pullback if silver pulls back during the US session and gives you a chance on SLV to then track it. We'll send a signal out. If silver just consolidates today and then there's moves made overnight, your SLV is just going to have to wait until tomorrow morning. But because of these bullion markets, because of the commodity charts being so choppy and overlapping, because of the equity market being in a phase now where it's one or two movements on a 1 hour chart within a 24-hour period, the currencies haven't had a great deal of chance to set up. And this week, this short Aussie dollar signal that was sent out Sunday night that picked up 100 pips really was tracking the global equity momentum. We haven't seen a global bullion or commodity momentum yet that sets up a currency trade. This is USO, Uniform Sierra Oscar, and USO tracks the movement in West Texas Intermediate oil trade, and it tracks it via the exchange traded fund that's traded on that kind of 8-hour window in the US. Very choppy, very overlapping. Unless you need to be in the oil market, this is not a chart that would draw you in. Very likely on this chart that you will get a gap higher. You're probably going to open up around the 39 area on USO, because we've had overnight oil movement which hasn't been able to be transposed into the exchange traded fund as yet. So in general, just looking at commodity markets that are bullish. We wouldn't want to be on the short side of global commodities at this point in time, but are not offering clear-cut signals that the global market is buying in to the bullish setup. If you need further details about expanding your subscription, or if you are on a trial run with the LFB and you want to make us a permanent part of your trading day and to expand your trading buddy outlook, go to the LFB website. Under services, you'll find the subscription data there to be able to upgrade your subscription services. Thank you very, very much for making the LFB an integral part of your trading day. We are very proud of the fact that we are your trading buddy.